certainly seen a lot of very good economic data over the last 1-2 quarters. I think it's a US economy that has been rebalancing. We saw it a bit yesterday where the service sector that has been by far the strongest one in the US is sort of coming down towards an average growth rate. The manufacturing sector that was previously in a recession coming up. And as Powell's been noting as well, the PC inflation reads, which were close to 5%, both on headline and core. About a year ago, they're sort of in the 2.5% to 3% range, so very close to their mandates overall. An economy which is relatively supportive. We have earnings growth likely to come in around 10% on our estimates in the US, a lot of sort of solid data. But of course, the very recent inflation prints that were a little bit on the higher side has put some question to markets when the Fed exactly will start cutting interest rates. One of the key drivers for equity markets, obviously, as well. And therefore, it looks like the June rate cut is at least very close to 50-50 at this point in time.
But Mark, what are the ingredients that you see out there, the catalysts that could drive markets higher if we continue to see further pushback on interest rates coming down in the United States? We've got yields which are at multi-month highs. Earnings estimates aren't really going up enough at this stage. I just don't see a lot out there to be able to give global stock markets that next leg that we need to see.
I think the one thing I would probably worry about is just that sentiment is getting a little bit stretched on a few of the metrics that we're looking at, because otherwise, big picture, I'd still say equity market is a little bit on the expensive side, but typically you want to own equities unless there is a real big hurdle for you. And the big picture is still one where, again, the world's largest economy, the US, growing relatively well. Europe looks to be bottoming. Inflation has been sort of doing relatively decent, okay. Earnings growth is back from a point of view where we used to have corporate margins that were falling, then now sort of stabilizing to moving up. So I think the big picture for macro investors is still one of a more fundamentally supportive picture. I think the bigger question we'll probably start to grapple with at some point is that when exactly do we get rate cuts? That's a big story. We have geopolitical risks still. So to which extent can commodity prices still rally and provide some portfolio insurance? We've seen gold prices up to $2,300, oil very close to $90 on Brent. So that's something that we've been thinking about as portfolio insurance investments also into our private client portfolios. Yeah.